Here is Tesla's genius strategy for how it delivers cars to and from China. Hello, my friends. Welcome to the Electric Viking. Fantastic to see you. Thank you for tuning in to the channel, for subscribing and liking the videos, sending me messages, and for supporting us on Patreon and as a member of the channel. Fantastic to see so many of you doing that. I really do appreciate the support. Now, a quick update on what has been happening on the channel. There's been some clowns commenting in the comment section, saying to people, contact me on WhatsApp, pretending to be me, pretending to be the channel. Contact us on WhatsApp for some prize or some nonsense like that. If anyone says that to you, just ignore the comment because I don't give out prizes, so it's not coming from me. Quick update on what's been happening in the electric car world. In September of this year, 17% of all cars sold in China were fully 100% electric vehicles. That's an enormous difference versus the same period last year when that figure was around about 5%. Companies like BYD, NIO, XPeng, Leapmotor, Aura, and a number of others have all either doubled or tripled their sales of electric vehicles this over the past quarter. Tesla's share price has gone crazy. Why? Well, one of the reasons is because they keep on reporting increases in profit and, of course, increases in the number of cars they sell. But one of the crazy things has happened recently, which was Hertz announced that they ordered 100,000 electric vehicles from Tesla and paid full retail price. I made a video about that, about why I think that happened, because it's pretty crazy. I've never ever heard of a fleet deal happening like that, where a company paid retail price for those cars. So Tesla stock is at all-time highs, now over $1,100, making it one of around about 4 companies in the world worth more than $1 trillion, joining Google, Apple, and I think Facebook as well. So if you want to get in on the action, well, one of the easiest ways to do that is by creating an account using the Stake app. You can download the Stake app easily on your phone. That's what I do. That's how I use it. And then if you actually use the referral code in the description below, use our referral code, you actually get a free stock. That stock might be worth anywhere from $10, depending on your luck, all the way up to $150, by the way. Those figures are in US dollars. So on the app, you can then purchase a range of different electric car stocks. You can't directly purchase CATL or BYD, but you can actually indirectly purchase those shares by purchasing exchange traded funds, either BATT or LIT. In addition to that, you can directly purchase Tesla shares, NIO shares, XPeng shares, and a range of different mining companies who mine lithium and other products used in batteries. So what exactly is Tesla's genius strategy for how it delivers cars to and from China? You got to admit, the way they deliver cars, the reporting after every month and after the quarter is quite confusing, because it seems as though Tesla have no demand in China, and everyone's saying, look, I told you, we were right. There's no demand for Tesla's cars in China. Ha 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 ha. We were right. All you Tesla fans, you're idiots. And then the next month, Tesla says, wow, look, we just sold 52,000 vehicles in China. So you are wrong, shorts, haters. Look at all the demand. So why is this happening? And is there demand for Tesla vehicles in China? Well, I can tell you right now, there's a lot of demand for Tesla vehicles in China. And Tesla sales in China would most certainly have been higher this year if they weren't shipping vehicles from China to Europe and Australia and New Zealand and Southeast Asia and other countries, Japan as well. Obviously, once Tesla's factories in both Texas and in Germany ramp up, we're going to see a lot less shipments coming from China to other countries. And then we'll be able to get a much better indicator of the actual demand that there is in China. So Tesla's strategy for how it delivers cars to residents of China and how it exports cars from China is quite interesting. And what makes it a smart strategy? So let's take a quick look at Tesla's numbers from Tesla China, or the Shanghai Gigafactory, over the last few months of 2021 and see why they are what they are, why they're so confusing. Numbers are much more accurate over the last several months as opposed to earlier in the year where just approximations were able to be found. Exports equal how many vehicles Tesla shipped out of China to deliver. Domestic equals how many vehicles Tesla sold directly to customers in China. Now, some of this report comes to you from talknews.com. So check out that website if you want to see the full report. Now, Tesla sales in September in China. Well, actually, let's start with October, the most recent month. Now, apparently, reports are coming out now saying Tesla sold 12,000 vehicles in China. Why only 12,000? Well, we'll get to that in a second. In September, Tesla sold 52,153 vehicles in China, and they exported 3,800 vehicles for a total of 56,000 vehicles produced in China from Tesla's Gigafactory in Shanghai. So you can see, right? It looks crazy. Tesla only sold 12,000 vehicles in China versus 52,000 the month before. Oh no, demand must be falling off a cliff in China for Tesla's vehicles. That's what the media will tell you. That's what the haters of Tesla will tell you, but that's not actually true. So what about in August? What were the sales figures for Tesla? Total vehicles produced, 44,264, so quite a few less than what they produced in September. Exports, 31,400. Domestic sales, 12,885. July, total vehicles produced, 33,000. Exports, 24,000. Domestic sales, 8,600. June, total vehicles produced, 33,000. Exports, 5,000. Domestic sales, 28,000. So you can see they're bouncing up and down here for good reason. It's a smart strategy. So you can see that the export numbers are the smallest at the end of the quarter in March, June, and September, and they'll be so in December later this year. Why is that? Well, that's because Tesla actually intentionally exports most of its vehicles at the beginning of a quarter so that by the end of the quarter, those exports and cars on the boats have time to get to customers who are actually, and so that those exports and cars on boats that will take time to get to a customer will actually get to a customer by the time Tesla reports their quarterly earnings and results. So obviously you've got to put a car on the ship, it's got to go all the way across the ocean, and then Tesla has to take delivery of that vehicle and then actually drive it to the customer, or the customer has to come and pick it up, and that'll take a couple of months usually. So the strategy here is, of course, that sale from the start of the quarter will be reported by the time the end of the quarter has finished. This is the reason for Tesla doing much more exporting at the beginning of the quarter instead of at the end of the quarter. When the end of the quarter comes and it is the last month, Tesla focuses on local deliveries in order to have as many vehicles as possible delivered for the quarterly earnings and results. So obviously Tesla is doing this in order to meet investors' expectations, or the general public's expectations. And this makes total sense. Tesla's current valuation is nearly 1.1 trillion. Toyota's is 250 billion. Why does this matter? I can tell you it matters right now. Well, banks look at this information when they give you a loan. They decide, are you AAA credit rating or are you Ford credit rating of, I think, BBB, which is one level above junk. And therefore, well, Ford pays more interest on its loan. Tesla pays less interest on its loan because it's rated higher. The more cash on hand that you have, or the more your company is valued on the stock market, the better power this gives you in terms of building new factories, getting lower interest loans, or sometimes zero interest loans almost, depending on where you're building the factory. And, well, you can do things like raise cash, raise capital, which is what BYD are doing right now, trying to raise about 1.6 billion in capital in order to build more factories, develop more batteries. So yes, it absolutely does matter, these end of the quarter numbers, because those are the numbers that increase the stock price, giving the company more ability to raise cash, get lower interest loans, or get more loans as they are needed. So will Tesla change this strategy in the future? Well, I think Tesla will definitely change its export strategy from Giga Shanghai to Europe when Gigafactory Berlin has reached a full production ramp, so probably by the end of next year. Tesla won't need to export nearly as many vehicles from Gigafactory Shanghai as it does now. That will mean they'll have more vehicles available in China. They may reduce the prices in China, or they may start to export those vehicles to other markets that Tesla doesn't currently export to. Now, obviously, some of the exporting will still occur, but it won't be nearly as much, and Tesla won't have to do a bunch of exporting at the beginning of each quarter in order to have the most favorable quarterly earnings report, which I think will be a really good thing for the company. Now, Gigafactory Shanghai is going to continue to grow. We know that. Tesla just ordered 45 gigawatt hours of batteries from CATL for next year. They've got it apparently reported they've done another deal with BYD for 10 gigawatt hours of batteries for next year. They have orders with Panasonic as well, orders with LG Chem for batteries. Tesla is most certainly planning to significantly increase the number of vehicles it's building at Gigafactory Shanghai. Now, total deliveries in China so far this year are 204,000 until we get October's numbers. Gigafactory Shanghai will have a production volume of over 1 million vehicles. So I would expect Tesla to have a much greater set of China numbers in 2022 and beyond. Now, obviously the Chinese market needs a car like the Tesla Model 2 or whatever the new smaller 25,000 potentially dollar car will be. It needs that car. I mean, have a look at the Wuling Hongwan Mini. Sales for that car are astronomical. The small car market in China is huge. And obviously a lot of people in China simply, and a lot of people all over the world, in Australia, America, everywhere, can't afford to pay between 40,000 to 100,000 US dollars for a car. So having that cheaper vehicle will, I think, potentially double Tesla's sales numbers. Now, what do you think of Tesla's sales strategy in China? I really want to know. Are they doing the right thing, exporting at the beginning of the quarter in order to be able to have those sales numbers on the books at the end of the quarter? Will Tesla need to export when Gigafactory Berlin reaches volume production? And is there enough demand in China for Tesla to double or triple its sales next year, as some are predicting? Now, full disclosure here, I am a Tesla stockholder. I'm a big fan of the company. Some of you might call me a fanboy, but remember, I don't just love Tesla. I also love what BYD are doing, NIO are doing, and Xpeng are doing, which is the reason I'm invested in all of those companies and not just one. Thank you for watching the channel, for subscribing, liking the videos, and for supporting the movement in general. It means a lot to me, and I love what so many of you are doing, contacting me, letting me know about the new electric cars you bought. It's all exciting news, fantastic stuff. Hope you have an awesome day. I'll see you on the next video. Bye-bye.